If you use them correctly, they could be the best thing in the world. And if you use them incorrectly, you can lose lots of money. Now, what am I talking about? Technical indicators. The first question every trader always asks is, what's the best indicator and which one is the holy grail so it makes me lots of money? The reality is they are tools, and if you don't use these tools correctly, you can be going to the downside. In order for us to find out which one is the best indicator and how to use it, we have Manny over here, who is one of our head traders here at 𝗦𝘁𝐶𝗽, and what we're going to talk about today with myself, Sukhdev, what are the best indicators that you can start using and you could use for the rest of your life when you are trading Forex, stocks or commodities. So Manny, before we begin, what was the first indicator you used?
Moving averages.
Okay.
Yeah, yours?
Actually, moving averages. Moving averages help average out the price, and it is most commonly the first indicator that will be used for any trader, whether you're beginner, intermediate or advanced. However, you can look at it from a simple way. You could also look at it an advanced way. But the simple thing is it helps average out the trend. Now, it can be complex when you switch time frames, but when you really understand it, it is a very powerful tool. So Manny, why don't you let us know a little bit more about moving averages?
Well, let's have a look at 𝗦𝘁𝐶𝗽 here, which has some built-in moving averages with our existing strategies. We have here an 8 and a 20 moving average, but some of the most common averages are the 50 and the 200 moving averages. And what you can do in 𝗦𝘁𝐶𝗽 is go back into indicators and go to your settings and change your averages to suit you. We have a 50 here, which is commonly red. It depends on your preference, but most people have it as a red average. And then we can also put on a 200 moving average. Now, Sukh and I will tell you the 50 and 200 average do wonders for long-term trading. So if you just shift this across to a 200 average, they're giving us a long-term and short-term approach. I'm just getting this on the chart here. So you're going to get your 50 and 200 to give you a long-term approach, and then 8 and 20 to give you a shorter-term approach. And what we're saying is, if the price is on the right side of those averages, we generally want to be bullish. Do you agree with that, Sukh?
Yes, and some of you may hear the terminology golden cross. So if it goes 50 crosses above the 200, that will be known as a golden cross. However, if
it crosses down, that's known as a death cross.
The death cross,
we didn't name that, by the way.
Yeah.
But
however, I too have used these trading strategies and I love them for momentum based. And a method I like to talk about is piggy banking. Now, if 50 is above the 200, theoretically you should focus on buys. Then you can use your technical chart patterns to look for breakouts to the buy, which should be another type of indicator we'll be talking about later in this series. So Manny, what other indicators do you see that are the most common used from the beginner to intermediate and advanced? So we know moving average is one of them.
Yeah, it's a very good question, and we were talking today, which is why we decided to put this video together, because we do get a lot of traders wanting to use loads of indicators. So you get the oscillators like your MACD, your RSI, your stochastic. Then you've got your 𝗬𝗏𝗏𝗏,
Well,
you've got your
I don't mean to
pivots.
interrupt you there, but every time someone says, oh, I use the RSI, and I say, why? Oh, because it tells me when it's overbought and it tells me where it's oversold. So while Manny loads it up, let me just get a bit of a, drop some facts to you. Just because something says it's overbought doesn't always mean it's going to turn back down, and just because something is oversold doesn't mean it's going to turn back round. You can be overbought for years, for months, for weeks, for days. And you can be oversold for years, for months, for weeks, or days. You have to use it in conjunction with other indicators and techniques in order to make it perfect. So if you are that trader who puts an RSI and says, oh my God, it's overbought, I start selling, and the market continues up, you need to understand how to use it with other techniques in order to make it that just much more better. And here we have is stochastics, and I love the stochastic.
Stochastic oscillator, we call it the stochastic. Nice and easy. Yeah, you love it as well.
Doesn't really roll off the tongue. Stochastic oscillator.
Yeah.
Oscillator.
CH, yeah, it should be spelled with a K, but anyway.
More like a Scotch oscillator.
Yes. I also like the stochastic oscillator, and we can look at the stochastic for divergence.
Yep.
And also there are ways to use it for momentum, but also, as Sukh mentioned before, some people do use it for overbought and oversold. Now, something I want to add is, and it's a dangerous place to be, you can overdo it, right? So people have a MACD on, they have a stochastic, they have an RSI, and their chart looks like spaghetti junction. But ultimately, what are we doing, sir? We're buying or we're
selling.
So what you've got to do is find an indicator that resonates with you. And you can do that with your coach, myself, Suk, one of the other coaches, or you do that simply by back testing, forward testing to find which one resonates with you. But as Suk, you were saying about the overbought and oversold, why do you like the stochastic?
Well, in trading, especially technical analysis, which uses past data to speculate forward, is that there are many techniques, methods, models, or structures you can use when trying to enhance your trading. Now, overbought and oversold at simple support and resistance areas, by adding those two together, that can increase the probability of you identifying that the market could reverse. Now, how you choose to position yourself is another conversation. But now, imagine this. You can see we got support. Can we find a nice little chart with the support? Actually, let's just look at this level here.
Right there, yeah.
Yeah. Okay. So if you put it there, you can see the markets come up to that level. Some traders will know this as a double top. As you can see below here, stochastics above 80, overbought. Now, what you could probably see on lower time frame, there will be bearish divergence, and to add to it, lovely price action, a bearish engulfing, and a breaker structure. Those are all indications for you to start looking for sells. Now, how you enter and exit could vary based on your execution method and your time frames. But when tools synergize together perfectly and easily, I like to say it gives you the easy trades, doesn't it?
Yeah, and I think if you just at a glance, you can see the areas that Suk mentioned here, but if you just go back as well, there are a few of these areas. You see for yourself that the market has come up here, and he spoke about divergence. This is something that you will pick up with us in some advanced workshops. However, if you look at the current price and look at this area here, we've been overbought for a couple of days. And this is where Suk said, look, you've got to be careful, because it's not as black and white as saying overbought, oversold, that's it. There's more to it than that, because we're also working with a game of probability. We know that those levels don't always work, do they?
They don't always work. Levels aren't the holy grail. See, there is no one indicator that is the holy grail. If you are asking which one would be the most simplest one, the easiest one to use, would say moving averages. But then adding specific tools towards that based on your trading style, whether you are a trend trader or a reversal trader or a range trader.
I like that.
Huh?
A trend trader.
A trend.
I love that. It's a new one.
A trend trader, like a choo-choo. So, well, look, at the end of the day, there are many indicators. I would say there's over 200 on some platforms, maybe more.
There's loads. And people are constantly building their own as well, aren't they?
Yes.
They get that too. I think just to, sorry to interject, I think it would be a good idea to reference exactly what Suk said. Look at gold over the last few weeks, and exactly what Suk said about overbought. It's been overbought. So it's easy for someone to say overbought and oversold works well. What we find is overbought and oversold works well in ranging markets, especially, or when the market's extremely cyclical, as in it's cycling a lot more. But when we've got strong trends like gold is displaying here, you will remain overbought for a while, and it's best to sit on your hands. Now, the best part about what we did back then was we asked for help. We spoke to our coach. We said, look, I'm using stochastic, I'm using an RSI, which one should I use and how should I use it? And ultimately, Suk found his way to use it, and I found my way to use it also, which is why we now know that in a strong bullish market with gold, we're not looking for overbought. But on the France 40 and some other currency pairs that we look at, we can spot that early and say that's perfect for overbought because it's at that level that Suk found quite nicely.
So there you have it, guys, and there's more to this conversation coming, because this is a massive topic with over 60,000 books and over 1 million videos on trading and technical indicators. You would think someone would have got it right, but if you want to put speed on your time and want to identify what is the best thing to trade, when you can trade it, and how to trade it using the right technical tools, then make sure you click the link below. And that's it from me, Suk, Manny.
Take care,
see you
guys.
later. Bye bye.
All the best. Bye bye.